Mixed global markets react to Trump's tariff delay and ongoing U.S. fiscal concerns. Global equity markets showed mixed performance on May 27, 2025, as investors digested President Donald Trump's decision to delay threatened 50% tariffs on European Union imports, while concerns over U.S. fiscal policy and debt weighed on the dollar and market sentiment. Asian shares slipped slightly, U.S. futures rose, and the dollar headed for its fifth consecutive monthly decline amid uncertainty over U.S. economic policy. President Trump delayed the planned 50% tariffs on European Union shipments from June 1 to July 9, easing immediate trade tensions and providing temporary relief to global markets. Asian equities fell modestly, with China's CSI 300 index down 0.06% and Hong Kong's Hang Seng declining 0.1%, while U.S. futures for the Nasdaq and S&P 500 rose by approximately 1%, signaling optimism ahead of the U.S. market open. The U.S. dollar struggled to regain strength, declining against a basket of currencies amid investor worries over U.S. debt levels and erratic trade policies, marking its longest losing streak since 2017. The euro strengthened to around $1.14, boosted by the tariff delay and concerns about the dollar's outlook, while the Japanese yen also gained ground, trading near 142 per dollar. Markets are closely watching Federal Reserve officials' speeches this week and the U.S. Core Personal Consumption Expenditures (PCE) price index due Friday for clues on future interest rate moves. Following a sharp rise in yields on ultra-long Japanese government bonds, Japan is reportedly considering trimming issuance to stabilize the bond market amid inflation concerns. Gold hovered close to a two-week peak around $1,833 per ounce, supported by a weaker dollar and investor caution over the U.S. fiscal outlook and global economic uncertainties. Brent crude and U.S. West Texas Intermediate futures softened slightly as investors weighed the possibility of increased oil production from OPEC Plus in an upcoming meeting. While Trump's tariff delay provided short-term relief, ongoing debates over his tax and spending bill, which could significantly increase U.S. debt, continue to create volatility and cautious investor sentiment globally. Overall, markets remain sensitive to U.S. policy developments, with trade negotiations and fiscal health shaping investor confidence as the global economy navigates complex geopolitical and economic challenges.